So hi Callum, welcome to the pod. It's great to have you here today. How are you doing?
I'm very well, thank you. And thank you for having me on. It's a pleasure to be here.
So let's kick it off. Why don't you tell me a bit about yourself and what you do?
Yeah, absolutely. So I'm Callum Woodcock. I'm the CEO and founder of WineFi. WineFi is a FinTech platform that makes it very seamless and cost effective to invest in fine wine. We have pioneered a syndicate structure that effectively allows investors to co-invest in diversified, expertly curated portfolios of wine at a fraction of the cost of owning the underlying bottles outright. So effectively, we want to make investing in wine as easy as buying an index fund or as easy as placing a trade on Robinhood or eToro, for example.
So let's go right back to the start. You studied history at Bristol and then moved into an asset management role. How did that lead itself to starting WineFi?
So it's an interesting one. So I went into asset management really because everyone around me was applying for various different grad schemes. I had this sort of sense that I wanted to be a founder, but at 21, 22, I had no real understanding of how to get there. And it seemed like the kind of ambitious people that I respected in my peer group, etc., were all applying to these grad schemes. So I ended up applying. I specifically wanted a sales orientated grad scheme, basically for the reason that I read a book called Rich Dad, Poor Dad when I was about 17. And it mentioned if you want to be an entrepreneur, you need to either learn how to build, meaning build software, or you need to learn how to sell. And I thought, well, I'm never going to be a developer, so I better learn how to sell then. So I ended up at Fidelity on their sales grad scheme. And then shortly afterwards, ended up moving to JP Morgan to work in their UK fund sales team. Working in an asset management environment gives you an understanding of what investors are looking for in terms of building diversified portfolios, but it also gives you an understanding of how to position those products. And it also sparked an interest in investment more generally in me as a grad. And I think all of those things contributed to the company I ultimately ended up founding, which is what became WineFi. So yeah, very tied to those early years. I think I probably wouldn't be running the business that we are now had I not gone that traditional asset management route first.
Yeah, it's interesting reflecting, I think, looking back, how these little experiences end up to where you are today.
Yeah.
So I think you weren't, from my understanding, you weren't at JP Morgan long before you decided to jump ship and move into a startup. Talk me through this thought process and what happened there.
Yeah. So listen, this is no disrespect to JP Morgan or the traditional asset management world, but I think I had increasingly become aware of the fact that I wanted to be a founder. And I saw people my own age, in some cases, who had been, friends or peers starting companies. And I remember feeling just incredibly stuck, actually worse than stuck, because it felt like I was progressing and building a skill set that wasn't that applicable to what I knew I wanted to be doing. And I also had this real sense, which I think is completely true, that the earlier you start, the more time you have to figure stuff out and make mistakes and everything. So I was very desperate to move into, a startup of some shape or form. And I think the deciding factor for me really was looking at my floor, not even the whole company, just my floor in the JP Morgan Blackfriars office in the UK, and realizing that I didn't know what half the teams on that floor did. I knew the product that I was selling as a salesperson, but they had a myriad of other products. There were 12,000 people working at JP Morgan in the UK alone, 250,000 globally. And, it sounds naive to say this, but I was 23, 24 at this point, having only ever worked in big companies. You really don't have a sense of how those big companies fit together. And I think that was a real catalyst in basically thinking, if I'm ever going to start a company young, which is what I wanted to do, or relatively young, I had to get out of that environment. And it was a really scary thing to do at the time, because there's a little bit of prestige attached to working at a big organization like that. It's a job your mum can tell her friends about and be very proud of you, etc. And it felt like I was taking a ridiculous leap into the unknown by leaving that organization. But at the same time, I knew that in order to really feel fulfilled, which I think is what I was chasing more than anything, I had to. So I tried to make that transition as seamlessly as possible, but I had no idea. I didn't even really know you could apply for jobs at startups. So I joined a scale up as a business development manager going after financial services. And then alongside that, was doing a part-time master's at Cambridge in entrepreneurship, which is a funny thing to do a master's in, considering it's so much about learned experience. So I did this master's. I met a bunch of really interesting people there. And I ended up becoming commercial director of a very early stage startup called Nomio, which is a legal tech startup. So nothing to do with wine or traditional asset management. And that was a real proving ground for me because, they built a really interesting piece of technology, but they were still very much figuring out product market fit. I led their go to market along with the CEO. And it was really all of the stuff that you do in a super early stage startup. I got to experience firsthand. And I think that really, really helped me end up becoming a founder full time.
Yeah, and it sounds like an incredibly formative time while you're at Nomio, just learning, getting on the ground. And was it instantly from day one you knew this is where you wanted to be, or did it take a bit of time to bed in, do you think?
Honestly, I think it was from day one. The CEO was very fun to work with. We got on very well. He was from a computer science background, so it was quite a good juxtaposition where my skill set lies, my personality lies at least. And I think the thing that struck me most was if I didn't turn up for work for whatever reason in the morning, like nothing would get done. And I know that sounds kind of like, isn't surely that's a bad thing, but it's actually very empowering because, when you're working at a big corp, they have optimized everything. You are a cog in a machine by design because those are mature businesses. Whereas at a startup, it's on you to get stuff done and deliver results, especially at the earliest stages and especially when you've gone the venture funded route where ultimately you have shareholders and there's an expectation that you're going to deliver success there. So I found that I don't know whether it's out of fear, but I found that really motivating. And it's also like you can see your day-to-day impact in a way that you just cannot at a big company. And I found that very liberating.
Yeah, no, that really resonates. I mean, it's so easy to get lost in a big corporate. That's been my entire career so far, and I very much can relate. So it was
Sure.
during this time at Nomio that the idea for WineFi came about, if I'm correct. Talk me
Yeah.
through how you discovered the idea for the business and how that came about.
So I'd actually been sitting on like the embryo of an idea for a while. So it originally started as me really looking to solve my own problem. So I had a little bit of cash to invest by that point. I was kind of late 20s. I had read about wine as an asset class. My fiance's family are in the wine trade or were in the wine trade. And it hadn't taken me that long to look at wine as an investment because I was just interested in investing. And it has all of these like very interesting characteristics that you don't really get in not just collectibles, but also alternative assets more generally. So it's offered historically better risk adjusted returns on a Sharpe ratio basis compared to equity indices, bond indices, commodities indices, including the S&P 500 and the FTSE 100, the latter surprising absolutely nobody. But it's also uncorrelated to those traditional asset classes. And in the UK, it's exempt from capital gains tax in many circumstances. So it sort of caught my attention. I thought, great, I'm going to look to build a wine portfolio. And, I remember going to a merchant and it was quite clear that they were basically trying to sell me what they had in stock as opposed to what was most likely to appreciate in value. And when I was asking questions about investing, I was supposedly speaking to someone within their like investment team, they kept coming back to what I like to drink. And I felt like that was the wrong question to be asking someone that was approaching it purely from an investment perspective. I think I had 10 grand or something to invest and I couldn't have dreamt of spending that on wine to drink. But given I was expecting an ROI on it, you could justify it as an investment. And then on the other side of the market, you have these wine investment businesses where they're effectively doing the same thing as merchants. They're just selling you the bottles, but they also charge fees on them. And I just thought there has to be a solution for someone like me where I can just put some money into a structure that is effectively managed for me and, is really focused on investment. And there wasn't really anything like that on the market. There were private equity style wine funds, but they had extremely high minimums and they were really targeted at ultra high net worths, family offices, etc. So I'd kind of been mulling this over and, Nomio, we were growing really fast. And about 3 years in, I basically started to think, okay, I feel like, this is a concept that, there is demand for. And it's an interesting one because when you're setting out to solve your own problem, that at least one person has that problem. And I wasn't ever under the illusion that I'm unique enough to be the only person on earth that has that problem. And the more people I sense checked it with, especially younger investors, so like 30 to 40, the more people were like, yeah, I'm not interested in spending 800 quid on a bottle of wine to drink, as fun as that would be, but spending a few grand on wine investment, yeah, absolutely. And basically was the catalyst I needed to end up raising capital for this concept and ultimately building what would become WineFi.
Absolutely. And so before I dive more into WineFi, if someone's out there looking to start a business up, but they don't have that winning idea, do you have any advice for them for sort of how to come up with it? Because I know yours very much came from a problem. Is that how
Yeah.
you think you should approach it? See a problem out there and try and solve it?
So I have really changed my views on this as I've got further along the journey with WineFi, because I was for many years what I would call a wantrepreneur, which is someone who wants to be a founder but has taken insufficient steps in order to be running a company or even like a super profitable side hustle. And I think that I got trapped a little bit in terms of problem thinking. I had to be like, oh, we need to be able to solve a problem. And that's absolutely true. But that problem can be as small as there is a process or a piece of software that is terrible, or like something that I need to do daily. And I really don't like how admin heavy or painful it is to do. And you basically just build a better version of that. You don't have to invent a new market in order to build a great company. And in fact, some of the largest startups have been built around the premise that they're just doing what has always been done, but better. And I think that I would have started a company far earlier had I taken that approach, whereas I was looking for like a really unique concept,
Yeah.
because I thought that's what you needed to have in order to found a startup. A lot of the most profitable businesses are the most boring businesses or the simplest businesses to start. And I think the reason for that is that there is a proven market. You're just applying new technology, or even in some cases, just a new brand to it. If you're an accountancy firm and you've got a really nice looking platform and great branding and you're appealing to a different audience to a traditional accountancy firm, that can in itself be enough of a differentiator. So I think that people can get stuck looking for a perfect idea when actually, depth is much better than breadth. And I think I kept looking for these, like the idea, I need the idea in order to actually pursue it. And you never really come across that idea. The idea that you come up with ends up evolving so much over time that it's almost about sticking with an idea until you've decided whether or not it is before you end up pursuing it full time, whether that means starting it as a side hustle that you eventually move to when it can pay the bills, whether it means raising funding, whether it means even just running it on the side permanently. It all comes from that same principle. And beyond that, what I really learned, and I saw this in myself, and I've since seen it in other friends and entrepreneurs, you have this initial boost of adrenaline and dopamine when you think you've come up with a great concept. And that's called what Alex Hormozy calls it unrealistic optimism. You're like, wow, this is going to be an amazing business. You run the numbers on Excel, you become spreadsheet wealthy, and then you start researching it in more detail and you might find competitors in the space, or you might come up against problems that you didn't know exist that kind of put you off. And then you end up in this like slide where it's like, informed pessimism. So you're like, oh, actually, it won't work for these reasons. And that's the stage where most people stop. And it's where I stopped for like the first 7 years of my career. I get really excited about something. I'd buy the domain name. I might get a logo done on Fiverr. In one case, I got it revenue generating, and then you hit a roadblock. And rather than actually go through that roadblock, your brain tells you, oh, it'll be easier to find something else. Let's go back to the drawing board. And it's at that moment where the inflection point happens, where you have to keep pushing on if the unit economics, etc., on your spreadsheet makes sense. And then you hit informed optimism, which is you understand the problems and the challenges of running a business like that, but you recognize that there is a market, you recognize that it has potential, and then you can start kind of building the company rather than ideating and getting excited about it on paper. And I think that that's the fundamental thing. And it's annoying because everyone says it, but you ignore it until you've lived that experience. And it's only with hindsight that I could go, oh yeah, that's what I should have been doing that whole time. But yeah, that's the benefit of hindsight.
Yeah, I think you raised a number of good points there. And I think particularly the first one you mentioned, that from my perspective, innovators often aren't the ones that see the most returns on their investment. It's normally the sort of the laggards slightly that actually create the most profit in an industry. They've seen what the innovator's done, they've adapted and improved on it. So absolutely, you don't need to be that first in there with the idea. And I think you mentioned during that you had already started another company before WineFi. Could you perhaps tell me a bit more about it?
So I had run this like kind of grad coaching side hustle, basically applying the only skill set at that point I developed, which was, I was like 22, which was like how to get a grad scheme. And I did a load of like university visits and gave presentations on how to basically get into asset management. And I did a bit of one-to-one coaching and stuff. It was always like working that entrepreneurial muscle rather than anything that was ever going to be big. But I just thought, okay, there's something interesting here. And I came up with this concept. It was called Tizen with a co-founder, which was effectively a B2B tool to pair coaches with employees. So nothing to do with asset management, but it was drawing on that kind of one bit of entrepreneurial experience that I had. And we ended up getting it to revenue, which was great. In hindsight, I think we could have raised investment for it. We had sufficient traction in order to do that. But my co-founder ended up getting another job, kind of lost focus. And I basically ended up wrapping it up because I didn't know what to do at the time. But it was a great lesson. It's like one of those paper failures where I don't talk about it very often because we never did anything with it. But it taught me a lot about, basic stuff like registering a domain name, to my point earlier, like building a website, cold sales outreach, some lots of bits and pieces that go along with it. And it got me really interested in startups. So this was kind of alongside JP Morgan prior to going full time on a startup. So I think it was a really valuable experience, ultimately a failure, but it teaches you a lot.
It sounds like you took a lot from it that you've applied to WineFi. So moving back to WineFi, for me, I don't know anything about the category. I'd like to tell me what is a good wine to invest in? What do you look for in the market?
So historically, if you were looking to invest in wine, you would have someone with, load of wine experience. So spent 30 years in the wine trade telling you what was likely a good buy. That has massively changed in recent years. One, because what constitutes a good buy has massively evolved. So historically, Bordeaux was really the only region that you can invest in because it was the only region with the secondary market. And because wine pays no yield, someone has to buy the wine from you at a higher price than you paid for it yourself, right? Yeah. So it's all about secondary market demand. So that's one factor to consider. That's since massively evolved. So Burgundy's become a significant part of the wine markets. Champagne, Napa in the US, Tuscany, Piedmont, the wine markets have really grown as interest in fine wine has risen. In terms of a good wine to invest in, I think there's a number of factors that you can consider. The first thing is obviously brand equity. So how well known is the producer in particular? Another thing will be vintage quality, a vintage being the year in which the grapes are harvested, and they can massively impact the quality of the wine. Another factor is, of course, aging potential. So wine, in many cases, gets better with age. And if you're a real aficionado and you like drinking wine, you really want to be buying wine at that peak drinking window. But someone has to have held that wine until that peak. And that's where wine investment is a thing. And then the final thing would be small production volumes. So the wine market is really unique. Really only whiskey kind of comes close in that you have a naturally limited supply because you have producers that can only produce a certain amount of wine in any given vintage. And that can be vanishingly small. So Domaine de la Romanée-Conti famously produces 512 bottle cases per vintage. So a really small amount. And that's the reason, or one of the reasons that it's one of the most sought after wines from an investment perspective globally. But also over time, bottles get damaged, they're improperly stored, and then of course they get consumed. Wine is ultimately a drink. So you have this ever diminishing supply side, and that's what drives up the value. So you're looking for wines with these characteristics. Now we've got a very sophisticated data model that we use to look at former price movements and basically choose wines that are both underpriced according to our models and have both the highest likelihood of outperforming. And we then put that selection in front of our investment committee who provide a qualitative overview. And they provide this kind of wine trade expertise that you need to kind of come up with a portfolio that would be, one of our syndicates. I gave Domaine de la Romanée-Conti there as an example, but traditionally it would be Bordeaux first growths. So the 5 first growths, Mouton, Latour, Lafite, Aubryon, and Margaux. These days, they are slightly worse investments because the new releases were so high. So investors are increasingly looking to Champagne or Burgundy or Tuscany or increasingly Piedmont. So there's a relatively large investment universe to choose from. We estimate that the size of the wine investment market is about 5.5 billion, to give you an idea, pounds. Obviously hard to tell because so much of it's in private hands, but really you're looking for wines that have those characteristics that I mentioned.
And do you think the future of the wine market is on that steady trajectory as well? There's a number of factors out there. I think consumers are drinking less alcohol these days, particularly the younger generations. Yeah. And obviously climate's a big factor that we're witnessing at the moment. So do you see that steady progression continuing?
So I think there's almost two different points there. So on climate, there is no doubt that the climate is changing. And actually the quality of vintages in many areas are getting worse because the climate is getting less predictable. So you might have heard the refrain that Sussex is the new Champagne because the south coast of the UK is increasingly looking like Champagne in terms of weather conditions. But what does that mean for champagne, and what does it mean specifically for champagne investors? Well, I think the interesting point here is that, as vintages become worse over time, should climate change impact these regions as it's predicted to, the wines that were bottled prior to that period of climate change are likely to become regarded as almost time capsules to this lost world, which should drive up their value because they're never making any more of them. And I think that there is a really strong precedent for that in the wine markets. So this is probably bordering on nerd territory, but I'm going to do it anyway because your listeners might be interested. But in the 1800s, there was an issue with an aphid called phylloxera, which basically destroyed European vines. So native European wines were wiped out by this aphid. So we had to import American rootstock to graft onto the vines in order to save them. And what you saw then was this huge boom in the prices of pre-phylloxera wines, so wines that had been bottled in this supposedly lost European golden age. And the fact that they were supposedly better because they were on the original routes has basically never been proven, but the market perception was there. So I think climate change, strangely, will actually benefit great vintages that are around now from an investment perspective. The other thing is around people drinking less. So the top end of the market, of which all investment grade wine by definition will be, there is no doubt that the consumers of those wines are getting older. And whilst many of them are drinking less, they are typically drinking better. So the demand for those wines continues to remain. But what will happen to demand for those wines as younger generations come through? So I think part of it's a marketing issue. The wine trade, and this is well beyond WineFi, the wine trade needs to be appealing to younger investors. But also when you look at like the price point that some of these wines are, clearly most younger buyers are priced out. No one is buying, a 800 quid bottle of Lafite or £2,000 bottle of Lafite to have, at a dinner party on a Friday night if you're 26. So what I would expect to happen is that demand for emerging regions starts to grow amongst that age group where the wines are really great quality. And there are so many examples of this, South Africa probably being the preeminent one, but they're still at a price point where people can afford. And I think that's a big macro factor that we have yet to see play out because alcohol consumption globally, people always forget, is increasing. That's not going down.
Yeah.
And you have markets like India, for example, with a hugely growing emergent middle class. The Indian stock market overtook the Hang Seng recently. And yet wine makes up 1% of their alcohol consumption. So there's a huge education piece to do that. If a market like that opens to fine wine, then I think we could be looking at a very different story. I think a lot of people only look at trends in the West, really meaning, Europe, Oceania and America, to talk about this kind of thing. So I think that there are almost too many variables at the moment in order to make a snap judgment on the future of wine consumption. But I think that, with climate change, the precedent is there already with the pre-phylloxera interest. And, I think that we're already starting to see people collect back vintages from regions like Champagne because they know there's a limited number of them left.
So it's an incredibly dynamic market, but I think the overall sentiment is that with all the factors considered, it still shows a lot of promise.
I think so. And I mean, it depends on your time horizon. Over the next 5, 10, 15 years, absolutely. Beyond that, I think it's difficult to say. You just don't have the data available.
Absolutely. And so talk me back to the start of WineFi. So you had the idea. How did you get the ball rolling? That's something I'm really curious about.
So I think I had learned by then from, the mistakes that I had made. And I really started by ensuring that there was an audience for it. So that initially started really with my peer group. And I was quite well placed to find out whether there was a market for it because I'd come from an investment background. So I was talking not just to, people that I knew that were involved in the investment space, but also to financial advisors and understanding how their clients viewed fine wine, family offices. And I think the real kind of spark was that, okay, this doesn't just have to be a consumer platform where individuals can invest in fine wine, but there was also a lot of interest from people that wanted to offer a product like this to their own client base, because then you have distribution as well. And that's the thing that makes a business like this scale. It's the kind of compound engine in this business. So I knew that there was a market there, and I then started working backwards. So I started looking for a structure that would permit co-investment. And we kept hitting roadblocks because a lot of the different structures basically were regulated products. And if you're investing in an equity product like an SPV, the capital gains tax exemptions that relate to fine wine in the UK don't carry through to the end investor. And that just struck me as a major disadvantage versus actually buying the bottles directly. We eventually hit upon this syndicate structure, which allows investors to co-invest whilst also owning the wine directly, ensuring that the capital gains tax benefits carry through. And then it really was a matter of building the platform, getting early traction, actually proving that people wanted to invest, building out our data model because we wanted data to be a big USP because it's just historically been very underutilized in the wine trade. And then basically fundraising to ensure that we could build out a more sophisticated version of the product and go to market ultimately.
So you decided very early on that you needed fundraising. There was no consideration to bootstrap it and try and do it yourself.
I think for a product like this, no. The main reason is that there is a winner takes all market here. And in order to claim it, you have to move quickly. The second reason is that it is a volume business. It's relatively low margin. You need to grow your assets under management and your customer base very quickly. And so I think that it lent itself to venture capital for those reasons, the size of the opportunity, but also the need to move fast. And actually, I'm very pleased that we ended up going that route, which a lot of founders disagree with. There's some that have had horror stories going the VC route, but I don't think we could have achieved what we have achieved in such a short space of time had we not taken outside funding.
I've certainly heard mixed messages about VCs, but it sounds like it's worked out. So what was that process like of raising that money? Was it quite simplistic? And how have you found it post-raise working with VCs?
Yeah, sure. Was it simplistic? No, because I ignored absolutely everyone's advice. So loads of people who were far better in the know than me basically said, start with angel conversations and then move up to VCs because, your first conversations always go badly because you don't really understand how you're positioning it. You've never pitched your investment before. And I think I had like 3 VCs on my radar. And I was like, I'm not going to do that. It's a great idea. Of course they'll invest. And got in touch with these 3 VCs, had 3 calls, and unsurprisingly, they all blew me off. So I was like, okay, maybe they were right. And then I really didn't have any contacts outside of those 3 VCs, despite working in startup land. So the first catalyst was I sent it to someone I used to work with who sent it on to like 3 other angels. And because it was wine and kind of interesting and a bit new, they sent it on to a load of other angels. Like 2 of those angels ended up investing. And then once you've got, a little bit of traction, it encourages more people to come in. And the UK has, as you'll know, the SEIS scheme, which basically gives tax breaks to very early stage angels. So the first 250K of capital that you raise is tax incentivized. And that filled up very quickly after that, which was great. And then we brought on SFC Capital, who are an SEIS fund, and they conduct due diligence. And I think that gave a lot of other angels encouragement. And then the big strategic value add that we have is a company called Coterie Holdings, who are one of the most significant, prestigious businesses in the wine trade. They're a holdco for fine wine businesses. And a friend put me in contact with their CEO, and the group was still being formed at that point. They had underlying acquisitions, but they were bringing the group together. We got on very well. And he's kind of like wine trade royalty. He's been in the trade for 30, 40 years, knows everyone, very trusted operator. And he saw very quickly what we were trying to do. And they've been aligned with us from really the earliest stage, which I think has been fantastic, not just from a credibility standpoint, but also from an operational standpoint. I think it's made a lot of suppliers really sit up and take notice, and also probably given investors, as in our clients, a lot of confidence in us as well. So it was one of those things where it took a long time to get going. I started fundraising in July 2023, and we closed the round in October 2023. So it took a while, but I was lucky that I was still at Nomio while I was fundraising. So the CEO very kindly let me fundraise during that period while I was kind of being off-boarded effectively. And that allowed me to step from, a full-time role into a startup while still having a salary, albeit a much reduced one as a founder.
Yeah, but it's a pretty dream way to do it. And I assume you approached those conversations with just a pitch deck. You didn't have a product or anything to show them at that point in time.
Not really, no. We had some traction. So we had some revenue at that point because the first thing we built was the data model to basically see whether we could select wines that were likely to outperform. We got our investment committee together really as advisors at that point to sense check what the model was putting out and help us spot gaps. And there are some gaps in an asset class like wine that only a human with, a lot of wine trade experience would be able to see. So I'm very grateful for their kind of early input. So we had some early customers. And I think actually at the pre-seed stage, that counts for a lot because most companies are coming to them with a pitch deck, or they're coming to them with a pitch deck and an MVP and no commercial traction. And we could go in and say, look, we've got actual revenue, and we had letters of intent. So there were a couple of platforms that were saying, like, once you've built this, we will list this on our platform and sell it to our investors. And that really helped. And I don't think I realized until I've kind of got friendly with our angels and VCs afterwards how important a factor that was. Because it shows that it's more than just an idea on a piece of paper, that ultimately they see a dozen of a day.
Yeah, it definitely sounds like it was a differentiator. And do you think now you've done that initial round, there'll be more in future, or is that you done?
Well, interestingly enough, we are considering a seed round. So we got to profitability last year, but as I mentioned, I think there is a winner takes all opportunity here. And the bottleneck, to be completely transparent, is top of funnel. So it's leads. And so I would see this as a pure growth round, really to increase brand awareness. I think the awareness around the asset class is important as well, and really to dial up our marketing spend. So we saw great traction, but really only from two channels, which were organic content creation on LinkedIn last year, and then a few distribution/affiliate partners. We want to double down on that, but we also need to be running ads and paid search and all of that fun stuff. So we will be raising funding, but for the same reason that we raised the first round, which is we need to run fast.
That makes sense. And you've mentioned it's a winner takes all market a couple of times. Do you have many competitors out there, and how do you differentiate against them, do you think?
So I think the really clear differentiation is we are the most cost-effective way to invest in fine wine. Yep. Every other incumbent in the market, whether they're a wine merchant who we wouldn't regard as a competitor because they don't specialize in investment, or a dedicated investment business, are ultimately selling you bottles of wine. And that's fine, if you're a collector, so you want the option of drinking them if you want. But if you're there for pure investment, I do genuinely believe that WineFi is like the only incumbent in the space at the moment. And I think we've got an advantage, one, because of our relationship with Coterie, but also because, strangely, the UK is the center of the global wine trade, which is very surprising to people not familiar with the space, considering, the UK historically hasn't been a wine producing region. But I think a business like this has to come from the UK because that's where all of the supplier relationships are ultimately. And so I do think it's a winner takes all market, in the sense that there is no go-to player out there specifically for solely investment. And that's what we want to pioneer. And it's worth mentioning as well, because a lot of people get misty-eyed about investing in stuff like whiskey and wine because, it's a drink. More money coming into the space benefits everybody, from merchants to producers to third-party storage providers, and ultimately the drinkers that are going to end up drinking those wines at peak maturity. So it definitely plays a role in that ecosystem. And I think as a result, it's an exciting place to be. If young people get into wine by investing in wine and then becoming interested in it as a drink, great. But we are always going to sit on the investment side of the fence, because I think that's what is missing currently from the market, an easy and cost-effective way to invest in wine.
Yeah, absolutely. And it's nice to hear that the UK is actually at the center of something, even if that is just wine. Yeah.
Yeah. Although, duty on wine has just been put up by the government. So who knows? We might be about to lose that crown as well, but hopefully not.
So from what I understand, you've scaled rapidly in this first year. I believe you've reached over 7 figures in revenue.
We have.
How have you achieved that? What's your approach been to gaining clients, growing sales, getting traction, all of that sort of stuff?
Sure. So I think something that's been really valuable for us is building in public, much to the amusement of my friends who are now very sick of seeing us posting on LinkedIn. We have, I think, increased awareness a lot about fine wine as an asset class, especially amongst the kind of younger demographics. We call them Henry, so high earners, not rich yet. So consultants, lawyers, bankers, whoever they might be. And what's been really interesting is how many of them have said, I knew you could invest in whiskey, but I had no idea you could invest in wine. And the fine wine markets, so the investment universe, is about 5 or 6 times larger than the investment universe for whiskey. But cask investment companies in the whiskey space have done a much, much better job educating the audience. They run ads on Instagram, basic places where you just traditionally wouldn't see a wine business advertising. So I think organic content creation has been really key. We are lucky that I think we've brought a lot of people along on the journey. So there are people that will follow us for 6 months, subscribe to our newsletter, start to understand the asset class, and then decide to make a small investment. About 30% of our clients last year reinvested within the first year that they were invested. So that appears to be working. And then a big unlock for us has been working with affiliate partners or distribution partners, depending on what you want to call them. Again, one, because I think it's allowed us to reach a larger audience, but also because it's lent us a lot of credibility. We've worked with some incredible companies like Alt.co, Hatch, the SEIS Fund, Founders Capital, IG Wines. There are a load of really interesting businesses that have basically introduced this model to their audience. And that's been a really good way of reaching an audience that otherwise would have taken us a lot longer, I think, to tap into. So it has really been those two channels. And now we're looking to dial up everything on the marketing front. So We will be running ads. We will be doing paid search. We're experimenting with very gentle cold outbound email at the moment. So it's all about winning trust, building credibility in the market. And now we're beginning to show our early syndicates the performance is pulling through. So we've produced our first reports on two of our syndicates, Champagne and Burgundy. The Champagne syndicate generated 8.6% alpha versus its benchmark. The Burgundy syndicate generated 18.6% alpha versus its benchmark. So for the first time, it's not just, oh, we're an exciting new brand, wine goes up, trust us. It is, we're an exciting new brand, wine can play a part in any portfolio, and here are the results to prove it. And I think that puts us in a much stronger position, and is one of the reasons why we're looking at raising further funding, because I think that we can justify it.
I have to say, I've been one of those approached by whiskey investors. I didn't think I nearly bought a barrel last Christmas or something like that. They're hard on it.
Yeah, definitely. And it's an interesting one as well, because wine has objective third-party market valuations, because there are companies out there like the LiveX and Wine Search. So you can basically see the lowest list price for the wine, a lot like residential property. Whereas whiskey doesn't have that. So it's a much more opaque market. And we've ummed and ahed about eventually adding whiskey to the platform. The difficulty is, how do you value it? And that's coming from someone on the inside of that company. If it's an outside investor looking at buying a cask, there are many reputable whiskey investment businesses, don't get me wrong, but there are also many sharks out there that are selling you something that is massively marked up and effectively starting investors underwater.
So with all this rapid revenue growth, I believe you've been growing the team as well. I think when we last spoke, you had 5 employees. It could well be more now.
Yep.
I'm keen to understand what your approach has been to that as well, because these first few employees are so crucial to a company.
Yeah.
What have you looked for in your first hires, and how have you gone about that process?
Sure. So our first hire was our operations director. That was quite an easy one because I worked with him at Nomia. So I knew what he was like to work with. He's extremely smart, far smarter than I am, and very good at just getting stuff done. He's very kind of financially and logistically minded, and I knew what I wanted to bring him on board as soon as possible, because in a business like this, it's so critical for tying every part of it together, especially while I was more focused on the commercial side. But really, you're looking for people that are excited by the journey as much as they are anything else, because you are going to be asked to work strange hours, because that's an inevitability in a startup. And I think that anyone that is excited by that concept, because the trade-off is, one, you have equity in a business that could potentially be worth something, but also that you get to create something from nothing. And it's that creating something from nothing that I found so appealing when I first joined a startup. So I know what that feels like. And I think you can tell very quickly from how people act whether or not they're going to be a right fit, especially while the team is so small. I've heard when it gets to kind of 15 plus people, it slightly changes. But like our head of data reached out and basically said, I'm so fascinated by this concept. I would happily work for free for a month just to show you what I could do. And we didn't take him up on the free bit of the offer, but we brought him in initially as a consultant, really. And he's now a full-time employee because he was so amazing to work with. And I think there's a lot of excitement around this idea that we're doing something that hasn't been done before. We're creating a new asset class. And there's a real kind of desire amongst the team about doing it properly, because there have been so many kind of fly-by-night, kind of wide boy wine investment companies out there, because it's unregulated, in the same way that there are the equivalent in the whiskey world, as I just mentioned. That I think we've built a very high integrity team who are all very excited by the mission. I would say that because I'm the CEO, but I do genuinely think it's true.
I think that makes a lot of sense. You've really got to have people that are passionate in what you're doing, because that goes such a long way. And so what have you found some of the biggest challenges have been over this past couple of years with the WineFi journey?
Yeah. So, I mean, where to start? Honestly, with a startup, you're constantly feeling like you're either nailing it or you're failing. There's kind of no in between. So a big initiative with myself over the past 12 months has been trying to stay between a 4 and a 7, rather than bouncing between like a 1 or a 2 or a 9 or a 10. I'm still working on that. But I think initially it was, it's one bottleneck after another. So initially it was, is this venture scale? Can it be funded? Then once it's funded, it's like, well, is the platform going to be built the way that we want it to be built? Then it's, are our data models going to actually ensure that we outperform? And now it's really a marketing issue. So we've solved all of those problems to date. And now we're going, right, okay, we need to grow our top of funnel. We need to ensure that there are more leads coming through the business in a way that actually makes financial sense, because you can spend as much as you want on marketing, but if you don't get a ROAS, or a return on investment, return on ad spend, ultimately you're just throwing money away. So that's our new focus. And we've got some great agencies that we're working with. A couple of them are run by close friends who I trust. to kind of learn that. But that's the next big unknown in this business. But it's so funny just thinking about that question, because I look back and I go, oh, they weren't challenges really. And it's only because I'm at the other side of them. I've paid down that ignorance debt that I had when I was approaching those challenges. And it's funny how quickly stuff that seemed insurmountable at the time seems like such a distant issue to have had.
And how are you approaching learning as a founder at this point? Do you have someone to guide you on this journey? You're sort of feeling your way and learning as you go.
Yeah, so I do. Again, for many years when I was super naive, I thought asking for help made me look stupid. And I gave up on that very, very quickly, mainly because I had to. When you're building a business, there's nowhere to hide. You work out what you're good at and what you're not good at. So I've got a mentor who's a very successful entrepreneur who I speak to every 2 weeks. And that's been a real unlock. I think it's also been an unlock in it's less about like the actual knowledge and how to do things, because I think anyone can work out how to do something, especially with Claude or ChatGPT at your fingertips. Often it's about the kind of mindset shift that you need, which I know sounds cliched, but if someone has been through a set of problems, they can really simplify it for you. And they go, well, I've been through it and this is what I did. It's fine, don't worry about it. And you almost need that permission as a founder to go, okay, I haven't encountered this problem before, but this guy has, and he says it's fine, so I'm just going to trust his judgment. It's weirdly liberating having a mentor. And then I digest a lot of content. So I've become kind of unhealthily obsessed with Alex Hormozy's podcasts, just because he is amazing at the sales and marketing stuff, but also simplifies concepts around like unit economics and customer acquisition costs, which is so important to what we're currently doing and the phase of business that we're currently in, that it's just massive value. And then I don't read as much as I used to, but because I think I used reading as a way of procrastinating. So I read like every startup classic under the sun, 4-Hour Work Week, 0 to 1, The Lean Startup, whatever it might be. And I almost used that as a way of kind of getting that dopamine hit and feeling like I was moving myself forwards, when actually I learned more in my first 6 months building WineFi than I ever did from one of those books. Not because those books aren't excellent, but because it's all about execution and actually getting out there and doing the thing. And again, that sounds horribly obvious in hindsight, but it took me so long to kind of move from like ideation and almost like academic study of entrepreneurship to actually being an entrepreneur and actually building a business.
Yeah, absolutely. Books can only get you so far. You've just got to live it and do it yourself.
Yeah, for sure. It's like, I'm going to misquote this, but I saw someone talk about how it's like reading a book about swimming. Having never got in a pool, but like reading about entrepreneurship is like reading about how to swim. And it's only when you're actually doing it that you're like, okay, actually loads of this wasn't relevant because I hadn't figured it out. So yeah, you're completely right. I agree.
And with that swimming analogy, do you think at the moment your approach to strategy for WineFi is literally keep swimming? Or do you have this vision and a roadmap to get you 1, 2, 3 years ahead?
Yeah, so we absolutely do have that vision and roadmap. We're at the stage now where we can start optimizing channels, testing different channels, optimizing channels. And then ultimately it becomes a matter of scaling up those channels in order to attract more people. So if we find that we're getting like a 3 to 1 LTV to CAC, then we know that we can pour basically unlimited amounts of cash into that channel until we hit a bottleneck with that particular channel. So in terms of syndicate growth, that's the obvious thing to be doing. But I think beyond that, I do want to go bigger. We've had inbound interest from major professional investors like family offices and boutique wealth managers who want wine to form a part of their portfolios. And we weren't, in all honesty, expecting that at this stage in our development. I think it's a reflection of the great content that our head of data has been putting out, in particular about comparing wine to other asset classes. So allowing investors to compare apples to apples. And I think that we will need a bespoke product for that audience, even if the asset selection process, etc., is the same on our side. And then the obvious thing would be international expansion. So we already have clients in 16 countries. And as a result, a US expansion would be an obvious play. There's huge demand for fine wine in Asia, as you've probably heard, Singapore, Hong Kong. So I think that we could be doing a lot more than we currently are, but it's basically choosing the battles or choosing the bottlenecks that you want to alleviate at any one time. And at the moment, we're nowhere near saturating the UK market. So it's about optimizing the website, optimizing the platform, and then really making sure that top of funnel flywheel is turning before we expand aggressively overseas.
No, it's incredibly exciting. So we're approaching the end of our conversation. Do you have any final words of advice you'd like to leave listeners with? Anything you'd like to say?
Yes, I think that the biggest unlock for me, other than just doing, which is a useful piece of advice in hindsight, but a lot of people will feel like they can't make that transition from from big company to startup, or they're not sure how to get started building a company, would be to find a mentor. Just find someone that has done the thing that you want to do and ask them how they did it. And I don't buy the whole, I don't know where to find a mentor when you have access to LinkedIn and you can read articles that quote certain people. And I guarantee if you send like 50 messages completely cold saying, oh, I saw this and I thought it was amazing, I want to be a founder, can we have a quick conversation? You will get a few responses. One, because people like talking about themselves, but also because a lot of entrepreneurs like helping, especially younger people, become founders themselves. And they can start fantastic relationships, and they can be the real unlock, because you get that sense of, okay, this person has done it, therefore I can too. And I think that that's a really powerful place to be. And I think that when I look back at my 23-year-old self, that was really the missing piece in this puzzle, and probably the reason why I waited so long in order to get a company off the ground.
I think that makes a lot of sense. And definitely something I've experienced in my personal journey with this podcast as well. You reach out to people and it's amazing the response you get back. So Callum, it's been brilliant to talk to you today. And I've loved hearing all about WineFi. How can listeners get in touch and hear more about the business?
Yeah, sure. So very active on LinkedIn. So my name's Callum Woodcock. And if you want to drop me an email, it's Callum, Callum @winefi.co. Always happy to answer questions, talk about what we're building, etc., etc. So yeah, please feel free to get in touch.
Perfect. Thank you very much.